Hey, what's going on, ladies and gentlemen? ANZD here with you, and I want to talk about the ISM Manufacturing PMI data. ISM Manufacturing PMI data for the U.S. fell to 48.4 in December of 2022, slightly below the forecast of 48.5, pointing to the second month of contracting in factory activities as Americans are shifting spending away from goods and services, so more focusing on investing, saving, looking forward for the future, especially if it's a talk of recession. Excluding the decline in April 2020 at the height of, the pandemic thing, this was the lowest reading since February of 2016. New orders are 45.2 versus 47.2. And new export orders are 46.2 versus 48.4. Declined further, and production shifted to the negative territory, 48.5 versus 51.5. It's kind of a good thing to think about it, because with the Fed and what the Fed is wanting to do, this data might be helping out the Fed. So on the other hand, employment rebounded to 51.4 versus 48.4, with many companies managing headcounts through a combination of hiring freezes going on, employee layoffs and things like that, employees retiring. So with the data that actually went up for employment, the Fed kind of want this to be down. So also inventories grew faster, 51.8 to about 5.09 or something like that. The pressures eased about 39.4, the lowest since April of 2020. And month-over-month performance of suppliers' delivery is 45.1 versus 47.2, was the best since March of 2009. So these data are kind of crazy, because these data is going to have a lot of effect on how the Fed minutes are, and the Fed minutes are out right now. So only two manufacturing industries reported growth in December: primary metals and petroleum. Very interesting. Petroleum and coal product manufacturing going on, and those are the things that's going to be needed. Petroleum and coal. The S&P Global US Manufacturing PMI, this is a different PMI data, was unrevised at 46.2 in December of 2022, pointing to the biggest contraction in factory activities since May of 2020, like we discussed in the other data. Output fell a solid pace that was the quickest in just over 2.5 months, I believe, 2.5 years. And new orders fell at one of the fastest rates ever. So that's going to kind of affect the GDP. It's going to affect the economy, inflation. There's a wide variety of things that these numbers and these data going to reveal. So companies also noted that a weak client demand stemmed from economic uncertainty. So people not spending as much as possible. Companies not spending as much as possible, and also inflationary pressures leading to lower purchasing power amongst consumers. People not spending as much as they used to because of the inflation, because of layoffs, because of job freeze and things like that. Foreign client demands also contracted. This PMI data is going to have a lot of effect on what the Fed's going to be doing. So contracted as dollar strength and global economic certainty weighs in. Also, purchasing activities dropped markedly and the fastest pace since May of 2020, leading to broadly unchanged lead timers for inputs as suppliers' capacity constraints were less apparent than earlier in the year. Backlogs of work contracted at a steep pace and employment rose. On the price front, inflation slowed. Also, output expectations picked up to 3-month high, but remain historically subdued, according to the source Market Economics. So ladies and gentlemen, like I was discussing, these PMI data is going to have a lot of effect on what the Fed rate is going to be, on how the Fed move in terms of their meetings. And right now we actually got the Fed minutes from the last meeting out, which will also explain some more data of how the economy is going to move going forward. So the manufacturing ISM report on business is based on data compiled from purchasing and supply executives nationwide. Survey response reflect the change, if any, in the current month compared to the previous months for each of the indicators measured: new orders, backlog of orders, new export of orders, imports, production, supplier deliveries, as well as inventories, customers' inventories, employment freeze, employment and prices, employment raises. The report showed the percentage report in each response. The net difference between the numbers of responses in the positive economic direction and the negative economic direction. So basically how the numbers is can predict how the economy is going to go. And diffusion index. A PMI reading above 50% indicates that the manufacturing economy is generally expanding, expanding manufacturing, things like that. Anything below 50% indicates that it is generally declining. So with that said, ladies and gentlemen, right now the PMI is declining, it's contracting 2 months straight, and what we have to look forward to is what the Fed's going to do about it. So once again, it's NZD. Hope you got some value out of this. Please like, subscribe to the channel, and stay locked in and subscribe, because I'm going to be doing some more information also on the Fed meeting minutes of what they had talked about in the last meeting that they had in December. So once again, it's NZD. Hope you got some value out of this. I'll talk to you later. Peace.